It's not just first-time homebuyers driving the housing market this year. It's also people buying second homes. My next guest says purchases of second homes could be up as much as 65% year on year. So who's best positioned to take advantage of this trend? With us now is Stephen Kim of Evercore ISI. He is the #1 ranked home builder analyst on Wall Street. Stephen, it's great to have you back. And so we've seen the phenomenon of vacation towns booming and that kind of thing, but who's buying all these second homes?
Well, I think that what you're seeing here is that folks of means are coming back for seconds, you may say, and you are seeing that across this market, the higher end buyer was really absent or certainly weaker than the entry-level buyer segment of the market for about 4 or 5 years. And that has completely changed. I wouldn't say that the higher end of the market is now stronger than the entry level, but they are fully participating in the smorgasbord here. We think that the higher end of the market actually also has a lot of legs and sustainability to this demand because of the fact that they don't have affordability concerns. So even as home prices are rising and rising, their home equity rises exponentially. They actually have more buying power. So we see this as a trend with some legs.
That's what I was going to ask, if the trend was just a one-time thing that would already be in the rearview mirror or not. So if you think it still has room to go, who in your coverage space does this most benefit?
Well, you know, the builder that comes most readily to mind is Toll Brothers. And in fact, they're reporting earnings on Monday. We expect them to have some very good things to say. My estimates actually on earnings are actually up 40% or 40% higher than the street consensus for next year and 70% higher for 2022. So I think that they're going to please the street with the things they have to say, and certainly by the things they're going to deliver over the course of the next year.
How are you 70% higher than consensus? What's everyone else missing in this story? Is it just this second home boom?
No, it's more than that, Kelly. What we're seeing here is that people are really failing to incorporate an understanding that home prices are going to be moving up significantly over the course of the next year. They already are, which is amazing that people are not willing to sort of project that forward. But I hear so many people say, my goodness, you know, home prices are up so much, nobody can afford these homes anymore, which sounds a little bit like when Yogi Berra said that, you know, nobody goes there anymore, right? Because it's too crowded. You know, I would point out that affordability is enhanced by the fact that, you know, these are all repeat buyers who basically already own homes already, and therefore their home equity is giving them greater buying power. I think people really miss that. And so when you have home prices moving up the way they are, which is basically almost like what we saw in the housing bubble of 2005, the builders take a lot of that and goes right to gross margin, and it drives their earnings power. And I think that's what people are missing.
And it's interesting, and obviously I can see how that would benefit all of the builder stocks and on a longer time frame than just this year. So because you brought up the analogy, it's what I was thinking of. At what point does this, if at any point, I mean, is it just so different that this doesn't trouble you because it's so unlike the housing bubble? Or at some point, is there a psychological effect from higher prices that we need to be worried about?
Well, when you ask the average person, home prices are going up, is that bad or good? Most people are going to say it's good because most people are owning a home already. So the only person who sort of, you know, for whom that's actually bad is the first-time buyer. But the first-time buyer is benefiting from the fact that you have very low mortgage rates. You know, there's the savvy investor, you know, on Wall Street knows that the 10-year Treasury yield's been going up, but the average person on Main Street just doesn't really care about that. They just look at the mortgage rate. And believe it or not, even though the 10-year Treasury yield is up about 50 basis points, the 30-year mortgage rate, which is what really matters, is actually basically right on its lows. Historic lows are 2.71% right now. So, you know, you're seeing the low end of the market benefiting from good affordability because of low rates. You're seeing the high end of the market benefiting from all the things that we just talked about. The outlook, I would think, is very good as well because there's such a scarcity of homes on the market, and you cannot change that quickly. Some people say, well, gee whiz, if everybody, you know, if people decide to move and they put their home in the market, doesn't that add supply? Well, no, not really, because they're buying a home too. So you're maybe, you know, adding a home for sale, but you're also taking up one, so it has no impact on the inventory of homes for sale. So with such a historic low of inventory of homes on the market, you are seeing this demand with nowhere to go, and so it pushes the prices up. That's why this is very different from what we saw in the housing bubble of 2005, when what you really had there was just ridiculous levels of demand and supply was not particularly scarce.
Shepard Smith here. Thanks for watching CNBC on YouTube.